I just realized I was on mute the entire time. My apologies. Uh, Let me go through this whole thing again. Um, I'm Ken. Welcome to Created Briefs, our Friday weekly show where we recap what's happening in the creator economy space. Greg will usually joins us, but he's running behind. But he will join us in a little bit. Thank you to all those that are tuning in on Twitter Spaces as well. We appreciate you stopping by and your support. So if you're unfamiliar, so Creative Briefs is part of a larger series that we do called Created Economy. On Tuesdays, we have our office hour show where Greg helps startups, entrepreneurs, builders, and creators kind of really get unstuck and figure out what's going on in the created economy space. On Wednesdays, we have more of our Q&A interview style format called Created Economy, where we talk to folks from Google, we talk to folks from of creators and builders and YouTubers to really dive deep into what's happening in the industry. And on Fridays, obviously, we recap what's happening in the world of the creator space. You can tune in and follow us along on social media, Created Economy on Twitter, YouTube, Twitch, Facebook, and also on Flipboard. Flipboard is where we curate all the news that we don't get to on this show, which there actually is a lot usually every week, and we never really get to get through most of it. So enough of that. What you want, let's get right into what you want to hear about. Let's talk about the news. And the first thing we have is crypto VC Paradigm just was co-founded in 2018, but they just announced this week that they've raised $2.5 billion venture fund. It's the largest crypto fund ever, and it surpasses that from, I guess, more traditional crypto VC, that being Andreessen Horowitz, which they announced 2.2 billion. So really, not only is Bitcoin and other cryptocurrencies going to the moon, so are crypto funds. So Paradigm is actually a firm founded by Coinbase's co-founder Fred Urson, and also a former Sequoia capital partner Matt Huang. So I think this is going to be really indicative of kind of what you see in terms of the decentralized web, the Web3 aspect of things. And I think we probably won't be seeing the end of these type of funds. I think we're going to start to see more of them. I mean, obviously, this is kind of the if we're seeing this push towards this decentralized web, this is kind of where we need to be going. No longer will funds be focused on, let me make a bet on social media platforms or photo sharing apps or, enterprise. I mean, obviously those will still be in demand, but I think a lot more emphasis would likely be placed on decentralization, since that's basically the next generation version of the internet. So here's some interesting stats here, some notes here. Some investments that Paradigm has made since it started in 2018 includes FTX, which I believe has a major sponsorship with the Major League Baseball, Coinbase, naturally, BlockFi, Maker, Uniswap, and Sky Mavis. So this is pretty interesting here to see, and we'll have to pay attention to what's going on with Paradigm in the future to kind of see if how they're really predicting the future of the next generation internet. So hello, Arnold in the audience. If you have anything that you would like to pipe in, raise your hand. If anybody in Twitter Spaces has any comments, please raise your hand. I'll try and bring you on the stage. Unfortunately, with the fact that Greg has all the bells and whistles, I won't be able to patch you into our live stream, but I can kind of communicate via nice little of venture capital and investing. We are all familiar with OpenSea, and so OpenSea today, actually this week, is reportedly in the talks to fundraise, and they are kind of interesting that they're about to, if they do raise, they're entertaining a valuation of at least $10 billion. So naturally, OpenSea is one of the largest NFT marketplaces on the internet today. You're obviously going to see a lot more competition in the future, that from Coinbase and potentially even Twitter. But this is a kind of fascinating, I would say. I mean, it's like 10 billion valuation for marketplace is okay. I mean, that's pretty good. But it also comes 4 months after it raised $100 million at a 1.5 billion valuation, according to sources that told the information. That round was led by Andreessen Horowitz. So there's going to be certainly a land grab amongst the VCs for these hot decentralized platforms. So, Greg,
I mean, this is the
here. I think I can't hear you, but
weird.
That's why I have the wrong headphones in, because I'm multitasking.
Yeah, well, Ken, I think this is interesting. Sorry for being late. Like if you think about like where the NASDAQ was or things like this, right? Commodities exchanges, et cetera. It's striking, I guess, because it goes against somewhat the ethos of like this huge decentralized thing that more and more money is being centralized into a place, right?
Mm-hmm.
But I don't know that folks have figured out per se yet what decentralized means, though, right? Like discovery is hard, right? And so like discovery still is like a problem you need to solve for, regardless of like the underlying system, right? Like decentralized things need to be discovered. Even in centralized universe, you need to discover things, right? So,
right.
Yeah, it is interesting though that they're being chased for this money. I don't know. This seems like a pattern that's happening more and more in the venture realm to begin with, though, right? Like,
yeah,
just like lots of like rounds happening quickly in quick succession.
Yeah, Greg, why don't you join our Twitter Spaces so the people there can hear you as well, and then we can pipe everything through your system. See, what would be nice is if in the creator space, if there's be some magical tool that would be able to pipe everything in, so that we don't have to do this MacGyver type of approach. But
yeah, there are no APIs yet to allow us to stream, which I think is a shame, unfortunately, right? All right, I'm over there, Ken. So you should be good.
Yep, I just muted myself there. Okay, great. Hello, everybody. We are now back on track here. So, I mean, you're right, Greg. I think it's almost like there's are we going to see like a bubble burst as it relates to, this type of whether it's NFT or decentralized, right? I mean, I don't think you can necessarily say specifically NFT. I think it's more like the decentralized world, right? Because you start to see not only is a lot of money being poured into venture capital, right? We just talked about how Paradigm just raised $2.5 billion. Andreessen was the second, had 2.2. Now you're seeing potentially a $10 billion valuation in OpenSea. Coinbase obviously now is public, but they've raised so much. A lot of money being poured in NFTs. Like, is there something that we should be worried about? I mean, is this a good time to be a creator or a builder in this type of space that you're like, hey, there's a lot of money to be tapped.
When you say builder, do you mean a builder of Web3 things or
a builder of Web3? Yeah, let's start with that, or a builder and then a builder in general.
I think it's an opportune time for sure, right? This is a fairly fundamental shift in our relationship to technology and sort of the potential of technology. And I think that there's infinite number of things to explore still. Look, NFT art in particular, I think is probably the smaller use case of the power of like NFTs in general, right? Mm-hmm. And I think, like, for example, if you look at like Ethereum, the promise of Ethereum was always based around like sort of the smart contract and the ability to sort of like execute in an accountable, transparent way these things. NFTs is not, I mean, it's in the spec, but it was not like, when you think about the early promise of Ethereum, it was actually in the ability to operate. It was the utility value, right? And so like when folks were looking at use cases for things, it was about how to create more utility. I think we are to some extent forcing ourselves, right, to like some of these communities being created on top, right, of this art are literally being forced into existence because they're trying to justify the prices. And then there are other, like, I think truly stood up communities that have like a bunch of meaningful connections that also will benefit from this. And the NFT will not be about art. It'll be about membership. It'll be about longevity. It'll be about engagement, right? Like it'll be about presence. And so I think all those other use cases are super compelling. Not that I think there's something wrong with the art use cases. I think they're totally fine. I just think that there's likely a lot more of the speculative BS like happening around the art side. And I think once you start to move to the utility side, it makes it harder to sort of like game it in those ways, right?
Yeah. One thing I'm wondering, is it a race to tap into the market or the investor market before things get a little bit more complicated in the NFT marketplace, right? You talk about what we were talking about earlier is that, Coinbase, Twitter, there's all these other emerging marketplaces that are coming out of the woodwork, or that will be emerging, that will be launching probably next year. And so things are going to get a little bit hairy for OpenSea, based on the information. OpenSea has handled $11 billion in NFT sales, and they're right now the big dog in this
11 billion,
space.
right?
11 billion,
And
yeah.
eBay in 2020 handled 10.27 billion.
But not in NFT sales.
No, I'm just saying, just purely from a dollar's point of view, though, right?
Yeah.
Like OpenSea is bigger
Yeah.
than eBay already from a revenue point of view,
Yeah.
right?
So could eBay? I'm sorry, not eBay. Could we OpenSea basically be like, hey, let's take in as much capital as we can now so that the doors. So when if we Coinbase or Twitter and all these other guys gain traction, we have this war chest to kind of bolster us so that we're not having to scramble later on. Like, hey, we don't have to answer necessarily those awkward questions down the line when we want to fundraise to kind of say, hey, how are we going to stack up against them?
I don't know. Like, I mean, I guess like once you start down the path, it becomes harder to not be on the path, right? Like,
yeah.
So for example, like, why doesn't OpenSea just do a DAO and raise a shit ton of money? Like they could probably raise $1 billion, right? Like from like all of these crypto whales and all these other people who want to like be part of the equation, right? But I think once you do take that institutional money, it is a treadmill, and it becomes very, very difficult to not be on it anymore, right? Now, I think you're right, though. There is likely some, what happens in early markets is that you can never make a call about where someone's going to end up, right? Like, and like all the feature sets kind of overlap, 5%, right? Like, and maybe there'll be consolidation. So maybe there's some like acquisitions of things that are a good fit. Maybe they want to be their own exchange later, right? Like maybe they want to roll their own coin and just have the capital to back that. Who knows, right? Like, so there's a lot, like you could see OpenSea saying, great, we're just going to trade in C, right? Like, or whatever, right? And we're going to make our own coin. And that's the only way you could buy anything on OpenSea. And who knows, maybe they'll totally ruin themselves. Or maybe what they'll do is make the world more accessible because they have the backing to like allow consumers to come in and use credit cards and do other things as well, right? In the process. So
yeah,
I don't know. It's a little early. I don't think there's anything I think it's just opportune right now. And this is still a small amount of money relative to what we're considering here, which is like an upheaval of like basically fundamentals of like all economics, right?
Yeah.
So,
no, you're right.
I mean, like the British government just said like that Bitcoin was getting close to like disrupting like their entire economy, right? Like, so that's the kind of stuff that the scale we're really looking at.
Yeah. Yeah, I mean, I think in the next year or so, it'd be fascinating to see how OpenSea stands up now compared to what it does. Like this 11 billion in sales, let's what happens in a year from now, amongst all these competitors, and is it going to be? Could we see this 10 billion valuation, reported 10 billion valuation? Could it be 20, 30 billion by this point? Because I don't think there's any signs of NFTs popularity abating. I think it's still going to grow.
Every other day we hear winter is coming for NFTs, so
it will, but I don't think it's necessarily going to shut it all down. I think it's just there's always going to be bumps in the road. It's just how big would that resurgence be? But let's talk about, well, since it is almost Thanksgiving in the United States, following that, there's a bunch this ushers in the holiday shopping season. And Greg, I'm not getting you anything, so relax. There's no pressure
Totally
for you.
BS.
But this is a point in time when it's people will feel they should be giving back, and rightfully so. And so there's a lot of these platforms that will launch new tools or new features or something to help facilitate those type of things. And Cameo is saying that says they are launching a new tool called donation. What is it called? I think, yeah, their donation tool, which is going to allow creators to easily facilitate payments to one or more nonprofit of their choice. Cameo has teamed up with this organization called Pledge, or this platform called Pledge, which is their whole DNA is to connect brands and consumers with their favorite causes, and to basically take all the legwork out of it. They have 2 million verified organizations in over 100 countries around the world, and they also work with nonprofits in the U.S. that are in good standing with the IRS. So here's how it works. So creators can basically designate not only the nonprofit that they want to give to, but the percentage of their earnings that they want to donate. And obviously that would be tax deductible. They will get a receipt for that. And checks would be sent out every month to the nonprofit of their choice. So far, $1.5 million has been raised for 300 charities through Cameo to date. And what's interesting is that Cameo did a survey, and they said 81% of their creators on the platform say that they intend to donate some portion, undetermined amount, but a portion of their 2022 earnings to charity. So
that's post. Is that post? So not like they're not directing the money directly into charities. They're just going to do it after the fact.
Well, the survey says that it suggests that it's like doesn't specify the condition, right? I mean, they're saying that 81% of creators intend to donate a portion of their 2022 earnings. So that could be through this donation tool, or it could be through just outside of the holiday season, just like, hey, I'm raising funds for whatever. Here's some percentage, right? I mean, 81%. Look, I think there's that stat could be held up to some scrutiny, because it's like, how valid is that 81%? Like, what is it? Is like, what is that portion? Right? I mean, it could be like, if it's like 0.5% of your earnings, could be like what, $100. I mean, something is better than nothing to a charity. Great, but I mean, I would also be curious to see how that percentage stacks up against other platforms, such as the Facebook properties, YouTube, Snap, TikTok, et cetera, et cetera, et cetera. And I wonder if somebody out there has done some sort of stat around that type of stuff. So, but nothing super hard news about it, but nice little fun thing to mention, just because it is the holiday season and we're approaching Giving Tuesday. So, Greg, this one kind of from about Fourthwall that you found. You beat me to this punch, because this reminded me of what Paul Backhouse was talking to us about on Wednesday's show.
Yeah, so Fourthwall, I hadn't really heard. I think I sort of loosely heard about them a long time ago, but I think like the pitch they're making, and they just raised a $17 million new round for all-in-one creator commerce platform, as they call it. I think creators obviously have like a complex life when it comes to sort of how they fund their businesses. Many creators are, as they call them, multi-SKU creators. So they have like multiple sources of revenue. What Fourthwall, it seems to me from my understanding, is that they are somewhat attached to sort of the merch production sort of side of the house. And so they actually can help with like the creation and fulfillment side of some of these like specialized products maybe that creators want to offer. But I believe that in addition to that, they are also building hooks and connectors to other services and platforms, though, so that they could try to give you sort of like a dashboard, all-inclusive look at sort of your revenues, right? Now, how critical is commerce to creators? My guess is this is going to be a super important thing, as creators continue to mature, right? We've seen other approaches, though, to solving sort of for this to some degree, right? Like, I think there's like the lower level, right? Like a Pico and things like that, maybe Spore, right? Like more on the CRM side, where you're just like, hey, here's your customer data, but they don't necessarily marry all of the revenue and performance data in. There's aggregators on the analytics and insight side, right? So I think like there are many realms inside the creator business that, we've talked about this in a thread just not too long ago. But I think like all of these spheres of influence or sort of spheres of expertise that a creator has, there's going to need to be tools that sort of bring together this information, make it easy to understand, make it actionable. And so I think like that's what we're seeing here. I don't know, like I haven't personally like been able to figure out like people who are using them. But it says like right now you still have to request an invite to actually get in, but nobody gets rejected apparently. Yeah, we should apply then. Let's see what happens. Let's see if that's really true, right?
Yeah. Look, I think this is what was fascinating about this is it's kind of like, again, what we're talking about with Paul, like the web is like this forgotten thing, even though it's just so massive, right? Everyone's flocking to these social platforms just because that's where the network effect is, right? And that's where you can do your one-stop type of shopping, so to speak. No pun intended here. But the more we talk about it, it's more like, well, this is basically a modern, well, I guess relatively new modern spin on like a Squarespace or a Weebly or a Wix. It's like this, I think probably could be a nice adjacency for Shopify even, right? It's like, what's stopping Shopify from doing something like this? Shopify, you already have your own page, right? And you do that for e-commerce. What's to stop them from doing this?
I don't think there's something that stops them per se, but likely the volume of commerce that we're talking about, like Shopify doesn't give a crap about, right?
So this is more. This is the lower, like this is like a small, like super small business version of Shopify.
I don't know if I guess it's I just mean that there's probably like an order of magnitude more revenue done by Shopify stores, by the way, which this may be inclusive of, right? I think like what differentiates this is really sort of just getting the creator side, because like when you're making money, you may be making money from courses, you may be making money from digital downloads, you may be making money from sponsorships, brand deals, and all these other places. So there's a lot of things you're selling, right? Yeah. And so like a Shopify traditionally is really just like at heart, really like e-commerce software, right? So it's really just about selling something on the web. And there's like plugins and things you can do to sort of get to new places with Shopify, but it's not native, right? Yeah. And so I think is it replicable? Everything's replicable, right? Like, is it likely? I don't know. Like, I just think like creator driven commerce is still in its nascency, right? Like, yeah. So if this is like only merch, like fans selling to merch, I think like we saw that stat, it was like only like 13%, or maybe it was 20% of like the way that creators made money. 20% of creators made money selling merch, right? And likely, that price still probably skews, right? Like to larger format creators, right? Like someone with like 100 or 1,000 subs is probably not necessarily selling merch, right? But if you are, then you're not selling a huge volume. And I guess so that's what I mean by this is like a rounding error probably for Shopify right now, right? I think as the market matures, yes, this could become more interesting or more compelling.
Yeah, and you're right. I think the more when we talk about it again, is I see Shopify is very much at its core was around just general commerce, and we're starting to see a little bit more like niche type of platforms geared towards creators, and then obviously there's a specific need, and creator, like as you termed it, creator commerce is very much like this, again, maybe a slightly different beast than just general commerce. So this is maybe Shopify for the creator economy. One thing that's kind of like I wanted to call out here is like, well, yes, you can request an invite, but there's really no vetting per se. I mean, no one's going to get, as according to the company says, nobody's going to get rejected. And literally they admit this is sort of a gating function to make sure we are actually getting creators in a platform as opposed to spam entries, right? So, okay, that's smart. But I also want to point out there's no fee to join Fourthwall, but if you make a sale, they take 5% of your earnings plus obviously standard credit card processing fee of 2.9 plus 30 cents on all transactions. So I wonder how that necessarily stacks up against other things, right? I mean, it's like 5% of creator earnings, that could be a lot.
I mean, that's not, look, every platform that has a take rate is usually higher than 5%, right? Unless you're like a major social platform and you're basically saying, I'll defer all fees just so I can like screw all the little guys who are trying to succeed, right? Yeah. I think I think though that the 5% is not much. If you think about classic margins on retail, right? Like, or wholesaling is like usually a 50% margin, right? So, that the retailer would pay for or wholesaler, right? So I don't know, like if they're helping you source the products and get them through fulfillment, 5% doesn't strike me as actually really that much.
Yeah. Well, worth paying attention to seeing what's going on.
Yeah.
So Instagram Live, now they're launching badges. I think we've talked about this many, many times. This is very similar to what you would get on Twitch. Everyone's copying the Twitch playbook. Not surprising. But yeah, so Instagram Live's badges for specific are launching in the US. There's 3 different levels. You can pay 99 cents, $1.99, $4.99. And it's kind of hilarious. Every time you see some sort of badges or some sort of subscription fee, those amounts always kind of show up. Like those are kind of like the staple for anything. Like you can do, if you want to do a paid subscription or badges, they're always going to be 99 cents, $1.99 or $4.99. And very similar, any questions or comments that you can post that are posted by a badge owner are shown more prominently to a creator, naturally, not surprising. And that your Instagram name will appear on a list visible to that creator for up to 90 days. Instagram says that it's not taking any cut of that revenue. So that 99 cents is just for you, the creator. So you can take that 99 cents and go to the dollar store and buy something.
Case in point.
How much is 90 cents? Well, wait, actually, I should backtrack. Instagram's not saying they're not going to take any cut of the revenue paid to creators until 2023. So you have a whole year to monetize the hell out of your.
See, but this is how the big platforms are trying to screw the little guys, right? Like if we're trying to build a company that actually needs to generate revenue to be sustainable, we literally can't take anything here, right? So we literally have to back that with venture funding, right? Or find some other way to fund it, right? Because like literally when you're competing against the natives, not only do they have like sort of the built-in advantage, they also are like intentionally manipulating the market, right?
Yeah. But there's also caveats. I mean, naturally, in order to take advantage of these badges, you have to be in the US. You have to be 18 years or older, have a creator or business account on the platform, have at least 10,000 followers. So I would assume that they hope that the 10,000 followers will convert X number of fans, of followers into badge owners, creator users, whatever they're calling it. And you have to be obviously in good standing with Instagram's policies and guidelines, blah, 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 everything like that. So I don't know. Sure, it's expected. Nice copy from the Twitch playbook, and a push towards more people to go live, I suppose. But it is what it is. So I'm going to skip over the other YouTube, the investment one for a little bit. We'll come back to that later on. But Greg, let's talk about Clubhouse. I mean, this is kind of fascinating.
Let's not.
Let's not talk about Clubhouse.
You
don't want to talk about Clubhouse on Twitter Spaces?
I think this was. I was just on a call talking about Clubhouse again, and I just don't. I mean, sure, yeah, great. It's nice you have this feature.
Well, I mean, Twitter Spaces has it for the web, right? You could go in the if you're on Twitter
let's be
Spaces,
clear. Twitter started with it on the first time you ever saw the product. Practically, I believe Captions was like in Twitter Spaces, right?
Yeah, and actually, I think it might actually be here. Oh, yeah, you can view Captions on Android. Yep.
I use them to understand what you're saying.
Wow, really?
Yeah, you see, look. Rona agreed. I got a fist.
You're a jerk.
So yes, they're apparently they've only rolled out on iOS, and so I believe I heard Paul Davidson said that sometimes they will test things one way or the other. Such that they'll roll it on an iOS or they'll roll it on an Android to test a feature, and then after they've gotten some work done it, then they'll push it back to the other side. So captioning is great. Like, I mean, it's great for accessibility. It's also creating like an alternative kind of like sort of archive of like what's going on inside the content. So I think nothing bad about this whatsoever, right? Mm-hmm. Better question is, why are we now 2 years into their existence or whatever it is to get captioning, right?
Small team, dude. I mean,
the technology exists. The technology has existed for quite some time to do this.
Dude, they have like a bajillion dollars. That's a gross exaggeration. Clubhouse has, but if they have a small team, like they only, like, I think it was a year ago, they hired their first Android engineer, and no longer am I using my iPad for Clubhouse. I'm using my phone for Clubhouse when I rarely use Clubhouse. But now I'm on, they're I guess they're moving at a more glacial pace than other people just because they have a small team, perhaps. I don't know.
That is an unacceptable excuse.
Well, that's what I'm giving you. That's what I'm giving you.
It's unacceptable in my mind, right? Like, you knew the space was going to be busy, right? Like, if you have a small team or you don't have the ability to move faster, then what's your problem, right?
Yeah. Maybe they'll just launch for the metaverse. I don't know. Maybe they'll surprise us. We'll have Clubhouse in the metaverse or something like that. Who knows? But all right, are we done with this?
I think we're done with this.
All right, we're done with this. All right, let's move on to Spotify. Podcast subscriptions moving available in more countries. Greg, what is so fascinating about this?
Well, I do think, when we talk about creators having more opportunities to monetize, and then, by the way, this was like a very small feature update, but I do think it was important because we've seen sometimes, like, when we hear about these things coming out, they actually aren't for everybody, right? And so, fan bases are global these days, right? And so, having like a podcast, but only being able to build people in the US, okay, cool. Except, if your viewership or your listenership or whatever it may be, in this case, right, is global, you weren't able to sort of necessarily monetize your entire audience, right? And so they've rolled it out to 33 more additional countries. That 33 sounds familiar. It sounds kind of like the Stripe numbers, but I don't believe they use Stripe underneath the scenes. It might be using Braintree or something else. But either way, there are a lot more countries now that you can basically make money from as a creator. And I think that's just good for podcasters in general.
Yeah. I mean, yeah, you're right. I think there's, the fact that, and I think this is very similar to with the Instagram Live badges. That's only available in the US. I mean, there's a much larger market outside of the US. Podcast subscriptions, primarily in the US, you get that. But, there's a lot. I think it's the fact that Spotify is available outside of the US. This podcast subscriptions outside the US kind of goes back to where Spotify's roots, because it wasn't founded in the US, right? It was
right.
Daniel Ek is European. I want to say I'm not going to say because I fear I would insult people, but he's European. I think it was like maybe Swedish or something. I forget. My apologies if I'm completely wrong. But I mean, so it's like Spotify probably recognizes that there's a lot more opportunities outside there. It's a natural evolution. Of course, you're not going to, if you're an internet company, why would you just launch one feature that's available that potentially that can garner you revenue? Why would you limit it to just one particular country? It doesn't make sense. So, but the fact that it's now available in now 34, so 33 new markets plus the United States, sure, more money to Spotify. Let's see if that makes a separate line item in their earnings report. So, and speaking of
sending money,
and moving from one streaming service.
Before we get to the big one, but this is another one in the mix. Did you see this one previously?
Which one?
I think Tom shared this over on the Means of Creation Discord, but this article. But Tidal is basically launching. If you're not familiar, the Tidal is a music streaming service, I guess, right?
Jay-Z started it.
Right?
Yep.
But one of the interesting things that they've done now that I think is super compelling. I scroll down a bit, Ken. I think there's a diagram in here, right? But they did do a thing now where they're passing through royalties to the artist based on who you listen to. And that seems like that sounds ridiculous that's not how it works. But it is how it works now. So they're passing through some of these royalties. And I think it's a great win for artists, basically. Yeah, where's that diagram? There's a diagram somewhere else.
Well, this was from the Billboard one. This is not necessarily.
Oh, maybe it was a different article that had
it. But here's an interesting. But to this point, you're talking about. There's a catch for the for the royalties, right? It depends on which plan you are on, right? Because based on this chart, if you're a free user of Tidal, there's no money that the artist or creator will get from that. You need to be at the top tier of Tidal's plan, and that's like $19.99 a month. Well, free for 30 days, then $19.99 a month. Then fan-centered royalties will get paid based on your streaming habits, right? And that's coming next year. So even if you're paying like just the bare bones, their hi-fi $9.99 a month, the creators don't get it. So you're banking on and who knows how many users Tidal actually has right now. I don't think that it was mentioned in this in any article here. But you have to be. You have to bank on having that many people have the paying the $19.99 a month. And when you think about like, well, why not go after, Spotify is probably maybe cheaper. Why not do that?
So I think the hard part, Ken, is so one, I think it's interesting to be able to you pay to sort of enable some capabilities. Patreon kind of works a similar way, like where there are fees. The fees change based on the capabilities that you use, actually. But what's hard here is making $20 in royalties actually could be pretty hard, right? Like, so I do think like as a smaller artist, like the numbers can be very, very small. And so there might actually be like a pretty decent window where you don't get to break even like as an emerging artist. So, but I think if you know that you are earning that much, like being able to now take control of that, it's powerful to have the option. Would it be great if it was probably like universal and horizontal, like for everybody? Probably. I don't know the music business well enough, but my guess is, whatever you can do to improve the flow of funds to the artist, the better, which is probably my general stance.
I mean, this is saying like, according to 10%.
Wait, is this the fan? The fan has to be paying this fan? And then, so basically they're distributing like the $20 that you pay at the top of the program, right? Like, so if I'm a Hi-Fi Plus subscriber, basically, right?
Right. So according to the article in Billboard, the Tidal Hi-Fi, and I'm reading this verbatim, the Tidal Hi-Fi Plus tier is where the revenue for direct-to-artist payouts and Tidal's fan-centered royalties will come from. Instead of using the current pro rata system, which pays rights holders based on their share of total streams, fan-centered royalties will be paid based on the streaming activity of each individual Hi-Fi Plus subscriber. In addition to the new payment structure, Tidal says 10% of the subscription fee from Hi-Fi Plus users will go to their most listened to artist that month directly to the Cash App account or PayPal account.
It's kind of medium-like, right? Like in
addition to their normal street. Yeah. So I think
how many people are in this bucket, I guess, is the question, right?
That I don't know. What I wonder though is, as we've seen with this land grab in how Facebook and YouTube are fighting against TikTok, right? They're willing to open their pocketbooks. I wonder if this is kind of that same type of thing to encourage artists to launch, to make their music or their work available on Tidal as opposed to going directly to Spotify. Because of this incentive to say, like, I don't know, like maybe it's a stretch, but could it be that you're saying like, hey, if, for example, Adele's 30 launched as exclusive on Tidal for some really random reason, then they can take, then more people will sign up for that Hi-Fi Plus because of more offerings and blah, blah, blah.
I wish Arnold was here. He's here, but I wish he was up here because he probably knows this space a little better than we do.
Yeah.
But yeah, I think it is interesting. I don't know. I don't know how the exclusivity stuff works. Actually, but speaking of which, our next article, I think, just adds to the nonsense here. Do
you want to talk about do you want to talk about this one? Okay.
Yeah, this one. So Facebook is now like speaking as the little guy building the new platform, right?
Yeah.
Like Facebook continues to just put their boot on people's throats here.
Why don't you read this headline? This kind of summarizes everything.
Yeah. The headline of the article from the information is Facebook hands out cash to creators to boost Clubhouse rival. So what is Facebook's thing called? Audio rooms?
Live audio rooms, yes. I mean,
live audio rooms, which is the new capability. Catchy. They are apparently paying $50,000 to help you produce and deliver content in a live audio room, with up to $10,000 that you can offer as a fee for guests.
Yeah.
Wow. Well, how come we can't be a guest on one of these? So yeah, they clearly have the money and they are flexing, right? Like they are putting it out there and paying, to get people onto the platform. Now, this doesn't feel very different than like, Spotify paying out 50. What did they pay for Joe Rogan? Like $50 million, $200 million, whatever it was, right?
Yeah.
So this is where we get screwed, right? Like this is where the incumbents can definitely work their magic to try to undo any of the innovation that any of the smaller guys are trying to create, and ultimately some of the benefits that creators are trying to get. Because guess what? I'm sure not everybody's getting offered $50,000. It's again the rich get richer, top of the pile, self-serving sort of head of the tail kind of situation again, I'm sure.
Yeah, no, you're right. And I think this is, you might think I think for the difference with like a Twitter Spaces Spark program, or what YouTube might be doing, or even Clubhouse, like they're trying to pick like just a broad group of creators.
And Substack has its fellowships and right, like all these.
And those are great. Like I think having a broad set, because that not only shows gives you idea of how your platform can scale, issues, all these type of things, right? And kind of shows the diversity of the people, of your creators. This, based on what I'm reading from this information article, it suggests, in my mind, that this could be something they're looking for, somebody with a little bit more, prominence, more presence, right? Because you're paying $10,000 to $50,000 per session to do
so
this.
It's not per session though. Just to be clear, it does say that in return, the social network asks creators to host 4 to 6 sessions. So let's pretend it's 6. That can be as short as 30 minutes, right? So that's 3 hours of content for $10,000 to $50,000. Basically.
No. It's $10,000 to $50,000 per session.
Huh?
But you have to. So you're getting. So if you do a 30-minute session, you do 6 30-minute sections. You're getting, and you get 50 times whatever that amount is. And I'm not good at math, so I won't.
Wow.
Do that.
Okay. Well, that's these. Now, here's the interesting thing, though. Ken, the line right below where you highlighted, it says the payouts could help Facebook and its parent attract more Gen Z and young adult users who've been spending less time on Facebook. And this actually seems to be the crux of this, right? Mm-hmm. Is that Facebook is pretty much like with their transition to Meta, they're worried about retaining this younger generation of users. And so these acquisition costs ultimately, I think, are like, they're trying and testing and spending as much as they can to figure out ways to make this like go back, reverse the direction that's been going in.
Yeah. This is in short, this is Facebook's spot Joe Rogan play.
Yeah. Minus the same thing as that.
Minus the bringing in the entire podcast as what Spotify is doing. This is they want the Joe Rogan type creators into here, and they're willing to pay that tens of thousands of dollars to get it done. Because I mean, I don't think that Facebook would say no to maybe a rising artist or a rising personality, celebrity, but like, would they pay us $10,000 to $50,000 to do this? No, I bet you they wouldn't. I mean, it would be their loss, but I bet you they wouldn't, right? Until we have this massive following, I don't think they would. But those are listening. Hey, if you're following us, check us out on
we're welcome to come host our show on. All right, how about this? Ken will continue on Twitter Spaces. I will do the Facebook.
Do Clubhouse. You'll do Clubhouse. But look, let's think about this. Like one last thing, Spotify Green Room. How is Spotify going to respond to something like this? I mean, this is kind of like impeding on Spotify's turf as well.
Well, Spotify has proven they have the interest and the wherewithal to also fund this type of behavior. So I could see it, But yeah, the wars are on, right? Like, time to stop screwing around, Clubhouse. Like, if you want to win, you need to start acting like it.
Yep. Take out that wallet, start spending. So, or start raising and then spending. Very much like what OpenSea is doing. So we're running short on time. We have 8 minutes left, and I think this came out last week, last week, and I posted this on Twitter. There's something fascinating about it. There was a conversation that Paul Backhouse and I had on Twitter, had an exchange. Greg, I know we're going to have this YouTuber on our show next year, which will be great, so we can dive deeper into this. The headline is kind of a slightly, I don't want to say misleading. It doesn't really sum it up, but let me just read the headline to you. It comes from Vice. A former Facebook VP thinks investing in humans is the future of VC. In short, Slow Ventures partner Sam Lessin, who was formerly a Facebook exec, made a $1.7 million investment in YouTuber, and I'm going to mispronounce her name, Marina Mogilko. My apologies, Marina, if I mispronounced your name.
By the way, Marina will be a guest of the show next month, or in January. So one of our first guests for the year will be Marina. So
so we'll talk about that. So the general gist here, she gets $1.7 million up front. And that's investing in that creator for a 30-year term in which she provides 5% of her creator earnings back to the firm. And I'm like, I post on Twitter, is this a good or a bad thing? I'm just genuinely curious. And it turns out, so this is not Sam Lessin says this is not indentured servitude. This is not like you're working.
There's
a lot of caveats on here, and this, it seems like, based on the scheme of things, this is a kind of a good move for Marina. It's not as bad.
Yes, I did watch. Sam was on with Jason Calacanis the other day on his show, and Jason, by the way, you're free to come use Zealous instead of that garbage you're using for your show.
Wow.
But, no, the show is great, but hey, there's better software.
Hey. Focus on the news.
But I think what Sam was pointing out was it's 5% of what she does. And a few interesting points here, right? Is that scaling only on revenue can be very, very difficult, right? Because revenue can be lumpy, and you may just see different challenges whenever you're ready. And so I think what you see oftentimes is, and Jason made a great point, which is that when someone's succeeding with something, you don't want them to stop doing that thing. You want them to do more of the things that are going to make them successful, right? So, so I think the point was like, if you're doing a great job creating content that is bringing in great brand work, but you want to make a product, you shouldn't slow down your content creation because now you need the time to go create a product, right?
Mm-hmm.
And I think that's totally right. It's totally reasonable. And so oftentimes, we've said this many times in the past, that the startup capital to make new projects happen is often the number one things that most creators are actually missing, right? And this is like, sometimes it's like, I need the capital to get the gear to get going. Like Clubhouse was providing grants to get people like iPhones and stuff like that, right? But I think like more importantly, it's like, hey, if you wanted to like say produce a new shampoo or body care or skincare line, you have like lab fees and other development costs, right? And then ultimately some marketing costs. Now, you may want to do that and you may have to wait. You either would give up like a significant portion of it to somebody else to take on those costs, or you would wait till you saved up enough capital. Those have been traditionally the options. I really like what Slow Ventures is trying here, because it's saying like these people represent an entrepreneurial like sort of ecosystem that like we haven't tapped into. And what if we provided a little bit of the kindling to make that happen? Now, they get 5%. So if she does a partnership as a creator with someone else, they get 5% of what she gets, right? So like, let's say so this doesn't preclude her like still going on and doing like a venture-backed business now. They would just have 5% of her equity in whatever, that new business would be. Basically, is what I understand it as.
Yeah, and if this 30-year term is not like that applies to that 30-year term. If she's doing something in the creator space, she gets the 1.7, like basically right now, and she can walk away and say, you know what, I want to become an engineer, I want to become a doctor. She keeps it. She keeps that 1.7, and like she does. I mean, this is they're not. She can go out and that's like a opportunity. I guess that's equivalent to companies unfortunately going under, right? I mean, it's like that's the risk that you take. And I think what's kind of unique in my mind, and this is and Greg, you might have heard this more, is like you don't often hear individuals getting money. You often hear the money going to some to some structural entity, right? Some corp business entity, like this holding. It's like I'm investing in Zealous. I'm not giving Greg directly that money. But this is different. And you're right. Like Slow Ventures is making a bank on that creator. Well, I think that's a great thing, because
it's a company though, right? Like she's still like basically a business entity.
Yeah.
Right.
I think maybe for me, maybe I'm just splitting that hair, because it's like literally it's the physical embodiment is that the person. Yes, she is her own company, but you're really giving it to the
analog might be like how there are now like kind of like startup studios or venture studios, and so people become LPs in these kinds of entities, and it's like you trust the people there to spin up and create interesting businesses. I think I think that's a comparable. So I think it's a good thing. Like I think we had when we had Heather on, I think, right, she'd asked that question, like why isn't any of that money going to creators? I don't think that obviously it's a very small amount currently, but I think like what Marina does well is that she understands how to build a business, is thinking like a business person, is framing her opportunity as a business, not like purely as an individual pursuit. And I think that has the benefit of lending towards like people viewing you now as a business, and ultimately as something that could be deserving of an investment, right? Or an investment that could return in a meaningful way.
I mean, there's a look at the what all these creators are doing. They're going off like, they could be like people which makes this record breaking NFT, and how much could if somebody, a VC had made an investment in that, how much could their take have been? A Marina could go off and say, hey, I want to strike a deal, do a new, launch a series with Netflix, or have my own show on NBC, or be in the movies or whatever. Like she could basically create her own MCN if she wanted to, if that's the case. The long-term implications for that for 30 years, could be enormous on the backside for slow. I mean, this is there's a lot of potential to see what's happening here.
It's a hard bet.
Yep.
We'll see, right? Like, you know, obviously, I think he said they were open to others. You know, she's got a big audience. It's not like she's not like in the mega realm, you know, like pure celebrity realm, I guess. But I think it's because of like how smart she is about what the things she's doing, and she's generating revenue already, et cetera, that actually made her like a really good target for this. So we are at time, and I know you've got to get into things. But yeah, good. Lots of good stuff. We do want to wish everyone, you know, a happy holiday as well.
Yep, happy Thanksgiving.
If you're celebrating it, Thanksgiving is coming up. We are going to be out for a bit. So Ken, I don't know if you're doing next week. We're definitely not doing any programming.
Yeah, next week we're off.
We're off completely. But the week after, I think I will do office hours on the Tuesday. And then I'm out on Wednesday. I'm not sure if you're going to try to do the news that week.
I will try and do the news on Friday. I mean, this was kind of a nice little emergency run. Got to figure everything out. So we'll give it a shot. Got to work out some kinks. I got to.
By the way, the space works fine the way it was, because you won't have me there. So if you don't have me there, then there's no problem.
Well, I won't be able to necessarily pipe it. There's some logistical things that we can work out here, but yeah, we can totally figure that out. But hey, if there's news that you guys are interested in, that you find fascinating, you want us to discuss or want me to discuss next week, in 2 weeks, feel free to slide into our DMs, tweet us, let us know. And do follow us on social everywhere. Smash that like button, subscribe. And
we are starting to get our guest list together now for next year. So if you've been wanting to be on the show, by all means, start sending us our names. Ken and I are going to be doing, you know, some thinking over what do we want to be when we grow up in 2022 over the course of the next month or so. So by all means, shoot us a message. We'd love to hear from you. And with that, I will say goodbye.
Cool. See you guys.
All righty. See you, Ken.